Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hansett Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now moving into this week, we've had that big disappointment on the US inflation data that drove the US dollar weakness on Friday. You also had retail sales weaker than expected, and the market are beginning to now significantly question the prospect of another rate hike in 2017 from the Fed. That is certainly weighing on the dollar and affecting across asset classes. Certainly commodities and equities are being impacted by that, equities being supported by the prospect of looser for longer monetary policy from the Fed, and also commodities on the weakness of the dollar. So this US situation is impacting throughout the markets. So not an enormous amount of US data this week to really change that view. Markets are going to be looking towards more the ECB, I think, to Thursday's announcement of monetary policy, and I think that will be the key focus for this week. Broadly, because what we have got is the prospect of potential tapering of asset purchases. Now, this sort of continues to mean that the ECB would be sort of squeezing or tightening the yield spreads of the differentials between Eurozone bonds and also US bonds, and that is helping to sort of drive the market of euro dollar higher. The yield spread between German bonds and US treasuries is a key factor there behind that market. So that is a key thing that the markets will be looking out for this week, on Thursday certainly. And also we've got a lot of inflation data, say for example for the UK on on Tuesday. And also we're looking out for the Bank of Japan as well. But broadly speaking, markets are sort of focusing on the ECB this week. Now, in terms of your forex, we've got this big move that we've had on the dollar on Friday. We had an upside move, certainly on cable, but euro dollar didn't really make that move, and it's still sort of testing the overhead resistance 114.89. Still seems to be positively trending. Weakness is being bought into, and I think that's going to continue. I don't see really why that's going to change, although obviously the market is going to be sort of focusing, as I said, on the ECB meeting. Any sort of disappointment in terms of tapering, you may see a bit of a pullback on the euro dollar, but generally speaking I think the Eurozone and the markets are sort of moving towards expectation of tapering in 2017 at some stage, and I think that will continue to underpin euro sort of performance against the dollar. In terms of cable, we've seen that big upside break. The 130 big figure area seems to be taken out as a resistance. 130 to 130.50 had been sort of a resistance area. That sort of upside break above that now needs to be supported, and you need to see confirmation of that breakout. So that's what I'd be looking out for this week, that market sort of holding above 130 big figure and then sort of building a support of a new sort of higher low. Now we've got dollar yen, which again impacted by the dollar weakness, broke an uptrend and continues to sort of roll over, posting some negative candles. Seems as though that rallies are being sold into, but it's pulling back effectively towards that pivot that we've seen throughout the last few weeks, really about 111.60 area, which is another sort of Fibonacci level as well. Other key markets on the forex are also sort of approaching key levels. You've got a huge multi-month high on the Aussie dollar as well that's being tested at the moment. Now, in terms of equity markets, we've seen the Wall Street markets pulling higher. Now, that has come as the markets have reacted positively for the prospect of the Fed sort of maybe having to rein in tightening. And that certainly helped Wall Street higher on Friday, along with some decent numbers as well out from the earnings season. But still, the prospect of looser for longer has helped Wall Street higher. Not so much on the Eurozone markets and the UK, because I think that sort of the concept of sort of tightening differentials or on rates is sort of helping to sort of pair, or certainly strengthen the currencies, which tends to sort of be negative for equities, certainly exporting equities, export heavy. The importing equities, whereby you sort of get the sort of foreign earners on the FTSE 100 impacted negatively on the back of that. So FTSE is sort of lagging a little bit, as is the DAX. They've still got their top patterns in place. They're sort of basically neutral rather than the Wall Street markets, which are pulling higher. The European markets are fairly neutral. Now, in terms of your commodities, we've got the gold price being benefited by that dollar weakness that we've seen, and also you've got the prospect of the oil price also being supported. Now, oil is still very much dependent on supplies. We had lower than it than recent weeks. You've got the rig count in the States, which is just sort of tailing off a little bit, and also the prospect of possible OPEC pressure on Nigeria and Libya to sort of curb their production levels as well, which is impacting. Now, in terms of your key economic announcements this week, we've got, as I said, UK inflation on Tuesday. Now, bear in mind the strength of sterling. UK inflation will certainly be in focus there. We've also got UK retail sales on Thursday. Again, that will be a key driver of sterling. Main focus being the central bank meetings of the Bank of Japan. Will the Bank of Japan do any sort of movement on growth and inflation targets? Potentially, certainly, inflation target dragged back, possibly sort of pushed out into the future, and that would help to put perhaps a little bit of dampener on the yen weakness, the yen strength that we've seen, and that could sort of start to find a bit of support for dollar yen. But the ECB will be the big focus this week on the markets. So with that in mind, I wish you good luck in your trading, and I'll speak to you next time. Thank you.